Good morning, everyone, and welcome to the European crossover webinar. And just for those that are listening here from in the States, of course, here we've had the time change with daylight savings time, a reverse of daylight savings time, however you want to look at it. But the time change for the UK doesn't come for another 2 weeks. So we were talking in the European crossover for European hours is staying the same until March 31st. But for those in the States, it's actually starting 1 hour later. So but it'll be back to the regular time statewide once we get the changes in UK. So we talked about it earlier before the other start time, and have decided, since it's a European crossover, we'll stick with the European time, and that will change over in a couple of weeks. So just wanted to go on and clear. Might be some confusion there, and I see that Amanda did go on and confirm that the UK changes its time on March 31st. So once again, this will be the time. Although if you're looking at European hours, this is the regular time, but statewide in the States, it'll be 1 hour later until the UK and US time are on the same page, so to speak. That being said, we've seen the euro continue to strengthen a little bit, and the dollar going and pair back a little bit. You see that here. Cable's also edged down a little bit here, and the dollar yen has stayed relatively quiet. Let me go on and there we go. And looking over here, and pulling up in the Aussie, coming back here. We're seeing the Aussie Yen come back here and make a move almost right up here to the 38%. So a little bit of an offsetting that we're seeing here. Dollar pesos come back a bit, and we were looking for that here in the peso, at least in the analysis. We'd had a pretty good run up in here, and there was actually some key resistance come in here at 1960. So we paired back. There's some additional support in here, but we'll get to those. And obviously, crude oil continued to work a little bit higher here. And so we've seen the dollar CAD pair back in here. Let me open this and move this back to the 2 hour. Let's get back to the main screen. And we'll go on and get into the news, and then we'll go and get into the analysis. We have the analysis ready for the week in the basic technical analysis. And let's just go and get into the news. So with the morning bid, the Brexit talks deadlocked before the crunch vote. With Brexit talks between London and Brussels deadlocked before tomorrow's Parliament vote on PM Theresa May's deal, some senior Conservative lawmakers are urging her to postpone the vote yet again to avoid a further humiliation, local media report. May's plane is on a standby to head to Brussels for crisis talk, but there has been no confirmation as yet that she plans to use it. the Brexit uncertainty looks set to continue down to the wire. News emerging on the Eurozone economy confirms the rationale for the European central bank's move last week to delay raising rates and prepare for a new round of stimulus in the shape of cheap loans to banks. A plunge in car production drove an unexpected 0.8% drop in German industrial output in January, even as Handelsblatt reported the government had yet again revised the internal growth outlook for Europe's biggest economy in 2018 to 0.8%, weeks after it slashed the target down to 1% from 1.8%. The region's second largest economy is even more sluggish. The Bank of France has morning trimmed its forecast for French fourth quarter economic growth, estimating just 0.3 compared with 0.4 before. Elsewhere, Eurozone finance ministers meeting in Brussels today must decide whether Greece has sufficiently delivered on promised reforms to get the latest 750 million euro disbursement from the Eurozone. The money is part of a 4.8 billion euro of profits from Greek bank held by Eurozone central banks to be handed back to Athens by mid-2022 on the proviso that Athens continues with painful reforms adopted under its three bailouts since 2010. On February 27th, the European Commission concluded it had not done enough to gain access to the cash, but could still get its stepped up reforms last fast. And into the markets, after the longest losing streak of the year, the MSCI's all-country index of world stocks ended 5 straight losses on Monday and nudged up 0.1% higher, helped by comments from People's Bank of China Chief Yin Gang on Sunday, indicating further monetary easing was in the pipeline to shore up the weakening. That might be the reason why we're seeing the dollar yen come up a little bit higher. China's economy, Shanghai stocks rebounded up almost 2%, with Hong Kong and Tokyo also higher. There was little from Sino-US trade talks, with reports repeating that progress is being made, but some distance remains between the sides. No date for a summit between the two countries has been set, and the wider theme of central bank easing has dominated again over the past week after the ECB surprised with a new cheap lending stimulus and pushed its timeline for an interest rate rise into next year as to cut growth and inflation forecasts. The dovish ECB stance under markets to some extent by signaling central bank alarm at the weakness of the underlying euro economy. News on Monday and expected 0.8% drop in the German industrial output in January only reinforced those concerns that the Bank of France also trimmed its first quarter growth numbers to 0.3 from 0.4, following a surprisingly weak headline February U.S. payrolls number on Friday. Fed Chief Jerome Powell said again over the weekend the Fed was determined not to move interest rates again until it saw more on how the economy was performing. That may assist in with the dollar. It's edging back a bit, not a whole lot, but it is edging back. Powell indicated the Fed would lay out plans to end its rundown of assets on its balance sheet at its meeting next week. The release later on Monday on January's retail sales numbers will be crucial after sales dropped the month before. So that's later on today. Euro dollars 112 first thing Monday, well above the near 2-year low after the ECB's meeting last week. The dollar index and dollar yen were edged higher, with starting down to a 9th day in a row against the dollar as it heads into a critical week at the Brexit impasse. No breakthrough emerged from the weekend talk between the UK and the European Union over the changing elements. Even so, if so, Wednesday we'll see a vote on whether the Parliament wants to leave the EU without a deal, with the majority expected to refuse. A third vote will then be set for Thursday on whether the UK should request from the EU a limited extension on March 29th Brexit date. Separately, the Financial Times reported on Monday that the Bank of England had asked UK banks to triple their liquid assets in the 3 months around Brexit as precaution for any hiatus in interbank lending. Sterling was also low against the euro first thing elsewhere. The European stocks were marked higher as the MSCI Emerging Market England Index and currency indices. Brent crude prices gained as Saudi Arabia said it would cut crude output in April. And let's go and move on. The Canadian dollar rallies as the jobs surge crimps bets for the Bank of Canada rate cut. The Canadian dollar strengthened against its U.S. counterpart on Friday as bets for the interest rate cut by the Canadian bank this year were slashed after domestic data showed a spike in jobs that surprised investors. Employers added 55,900 jobs in February, which was the third month of outsized gains in the last 4. and exceeded the 20,000 jobs created in the U.S. for the same month. Analysts had forecast February job numbers to be flat in Canada. It was a great report card for the Canadian jobs market, and it flies in the face of some of the other statistics that have been seen lately out of Canada. Chances of interest rate cuts by December, which had climbed this week in a more dovish tone from the Bank of Canada, fell to less than 20%, about 40% before the jobs data. If you look at this big picture, it's an argument for the Bank of Canada to remain on the sidelines in the near term rather than for one of them to consider eases, said Andrew Kelvin. And short pound bets fade 3 weeks before Brexit. With 3 weeks to go before Britain is due to exit the European Union, interest in selling the pound against the dollar and the euro is dwindling as currency traders bet that the worst case scenario of a no-deal Brexit will be averted. Overall, the positioning still implies a degree of caution among the outcome, but with Parliament expected to extend the date of Brexit beyond March 29th rather than Britain crash out of the EU without a transition period to minimize the economic disruption. It's about up 7% against the dollar year to date, making it the world's best performing major currency. Various positioning gauges, meanwhile, indicate the selling sterling in anticipation of being able to buy pounds back later at a lower price. Shorting is becoming less popular. CFTC offers the most reliable and frequent updated investor positions through its data measures only a tiny fraction of the market. CFT data was unavailable for some weeks due to the shutdown, while some figures are now trickling out. BNP Paribas FX positioning tracker, for example, shows that on a scale of 50-50, sterling shorts were completely pared back in the week to March the 4th. Separately, analysts by RBC of third-party flows data shows pound buying surged in the two distinct rounds recently, especially against the euro. We've seen a huge amount of interest in buying sterling through our positioning monitor recently. Most of the interest is in plain sterling strength versus the euro rather than the dollar. The first round is the week of January 1st, and the second occurred on January 25th. Similarly, Nomura's positioning metrics indicates that net shorting positions have declined near their lowest levels for the year. The sizable drop in overall short positions gets with a reassessment of chances of a no-deal Brexit. Investors are far more cheerful on the pound's prospects lower. There's optimism on the pound in hopes that the hard Brexit is avoided, but the nature of any delay in the Article 50 or even an acceptance of May's deal introduces new possibilities and the risks to investors to consider. Our position indicator shows position is still short as there's a bit of uncertainty, said Claire Dessau, Millennium's head of global economics and trading. And growth worries bolster the dollar as sterling dips before Brexit. After the ECB's downgrade on the growth outlook for the euro area, together with the weaker than expected Chinese export and import data, worry over the global economy is resurging again. That's pushing the euro down and other currencies, he said, but the U.S. is not particularly strong, but other areas are weak, and traders have found hopes and figures show the U.S. employment slipped back below 4%. On Monday, most currencies stayed within well-trodden trading ranges. The big exception was the pound, which gave up 1/3% to 29.73. Sterling came under renewed pressure after British Foreign Minister Jeremy Hunt said on Sunday Brexit could be reversed if lawmakers reject the government's exit deal. His remarks followed a warning from two major Eurosceptic factions in Parliament that PMA was likely to face a heavy defeat in a parliamentary vote. The British leader is scrambling, so far unsuccessfully, to secure last-minute changes to an EU exit treaty ahead of the vote. Speculators seem to be taking sell positions in the pound after it was bought for a short time as participants are awaiting the Brexit outcome, said Yukio Ishizuki. And lastly, and we've already covered the morning bit, so we'll go and move right on into analysis. So it says, after breaking the new lows on ECB Thursday, the euro found some short covering on Friday, defending the 11.90, which was the 61% of the entire move of 103.46 to 125.57. Resistance comes in at 12.60 on a daily, with weekly support being the 11.49 as a target for shorts. So when we look into the euro, we've made a little bit of a run up here, but the resistance that we have coming in for the euro would be the key 1260 right here. That's on, we're looking on the daily chart, and that's going to be our resistance. We can take also a look here on the 2-hour. Then on a very short-term basis, we can go on and pull up a fib here. %, didn't come in until 1269. The key is going to be the 1260 daily. Could we get a little bit extra push? Yeah, we could. For today, we're going to put the, let's pull up the bias chart. So resistance is going to be 1269. That's going to be the 38% that we're looking here. Right there, you see that. But the key closing resistance, and you can see it clearly on the daily, is going to be 1260 right there. You can actually go in and mark that off. That'll be our key closing resistance. Now, as far as support, well, we know how important this 1219 was. Let's go on and move back into the 2-hour. And we'll go right there with 1215. 1215 for the support. Intraday wise. We might see the dollar a little bit on the backslide. With that, we're going to move into the cable. Cable continues to pare back toward the breakout level of 29.87 that confluences with 29.79, the 38% of the move from 23.56 to 33.52. Secondary support is 29.21 with resistance at 30.64 followed by 31.11. So it continues to pare back to the breakout level of 29.87, and we'll take a look at that here on the daily. Here's the breakout level. We talked about the 29.87 and 29.79 is at 38%. So for all intents and purposes right now, we're at that 38%. And there's a little bit of support coming in right here, very key, 29.53. So this is a key area right here with the 38%, but I'll tell you what. $29.30 if they want to slide a little bit further. We've already come off quite a bit. Let me take a look here. Let's go move into the 2-hour chart. The 78% would be the 28.89, and we know how the cable likes the 78%. But for today, a bit of a stretch here. We're going to go right there, 29.35 for support here on the cable for today. We'd expect to come in and find some short covering here, value short covering. Of course, it's under a lot of pressure though. It's just an area where that, certainly we can slide and make it move down here to 28.89. It's just if you dip down there to 29.35, you should see some some value short covering coming in at that point. We indicated that initial resistance would be 30.64. Well, we're certainly under a lot of pressure right here, so resistance may come in before they're here. If we get a pop back up, it's going to come in right there at 30.52. 30.52, but certainly it's under a lot of pressure. For right now, overall, we still got to give it the benefit of the doubt. Now, it may change from bullish to bearish by tomorrow, but for right now, it still has that. When we look over here on the daily, if we're not able to defend this 38% and we get past 29.87, it's going to start to change it. It's not bearish yet, but certainly under some pretty good pressure. But like I said, we're here at the 38%. That's what I'm thinking is if we dip down here to 29.35, and you can see it right here. Look at that on the daily. You see that? That comes in right there, 29.31 or 29.30, potentially exactly 29.33. So anything down here, I would look to see some pretty good value buying. You can see right here on the daily how important this was. The low here, the low there the next day, the open, but we closed right in here just above it, and then low just below that. So I would think you'd see some pretty good value buying coming in right there in that lower 29.30s. Good short covering area here. Into the Aussie dollar found buyers at the 70 cents level, or just before it. But downside momentum remains with the target support at 69.55, which is a 61% of 67.45 to 72.95. Initial resistance is 70.90, with a secondary resistance of 71.20. So let's go and take a look at the Aussie. So this is what we're referring to here, and we were expecting a move to come eventually down to the 70.27, and it did. We kind of took this out. We thought it might even overshoot this and break and head to the 69.84, but we did find support generally in this area. We dipped just below it. So for right now, we were saying that initial resistance would come in at 70.90, and coming in here right there. That's what we're going to look here for resistance. It's not that close, but certainly with a little bit of dollar pair back, you can make that run up here. We'll call it actually 70, right there, call it 70.91. And support's going to come in right there at 70. I like the 70.25, but that's so close. We'll go with that for right now, the 70.25. There you go. So moving into the dollar Swissy, we still continue to be up here at this key level here. Take a look here on the weekly chart. Look at that 70.25. I mean, par, or we call it 125 right coming here. Strong, huge weekly resistance. And you can see it just barely took it above here and started to fade back. So this is huge resistance. I mean, we're looking right now on a weekly chart. And boy, that is strong. We'll go with that for the resistance, which is going to be 112. We had it right there on Friday. And for support, a little bit of a dollar pair back. We're going to write there. Par 56. Par 56 for support. If we get that dollar pair back. So looking at the dollar CAD found offers on Friday just above 34.50 after a strong run. Further upside to 36.50 is in the cards overall. But short term, the market will be bracketed with the upside of 35.04 resistance and 33.54 support. Secondary support on the dollar weakness would be 33.07. So we're still holding up fairly well here in the dollar CAD. Here's that key 34.18. And, you know, looking at 34.56, remembering I mentioned that. And here you got the 34.60 here, the 127%. So we did pair back, but this has held up relatively well. If you look at it, and you would think we might even be even a bit lower here in light of where we stand here with crude oil. Saudi saying they're going to go and cut back anyway, so that may pull the dollar CAD back a little bit, although it's still holding up fairly well. Support here coming in here, we mentioned that 33.54. Support's going to come in right there at 33.60. 33.60 coming across. Let's just call it right there, 33.58. We said resistance would be bracketed also up there at 35.04. Well, resistance on the short haul here, we're looking right here at 34.49. 34.49 for the upside for right now. And don't forget, with crude a little bit stronger, it might put some further weight on this. because it's certainly coming up with a bid with the Saudis saying they're going to cut anyway. Now going back to we're still saying overall it's bracketed with upside of 3504 and downside of 3354. We're looking at 3358, which so we got that daily support level coming in here. But for the overall, we can still make that run eventually much higher, and probably why the dollar CAD is holding up still relatively well. But nonetheless, on a short-term basis, we've had a heck of a run here. Also came into this 127% extension from here, and also some resistance. And here's that 3504 I mentioned. I think you can still take a little of a pause and look, there's 3354, and we're looking today at 33.58 on the 2-hour chart. So really a good area here, or if the market wants to move lower with the little bit of a bid here in the crude oil. We'll move into the dollar peso. Dollar peso encounters some strong daily resistance at 1960, confluencing with 1952, the 127%. The path to the upside appears clear, but the market bulls may need a pause to refresh with 19446 as support. Initial resistance is 1953.7. So let's go and move into the peso. Had some huge daily resistance coming in here. You see that here? Look at this, all the way back. Look at this high. You get knocked back. We break through it, which opened us the rally, and we come all the way back to what, 1960. And then you can see here, after being all the way up in here in the stratosphere, where we finally come down and have a little bit of a battle line, right just around 1960. So it made sense that, and although we were looking for maybe a little bit higher, maybe even an upside pop if we got that strength, if the dollar would continue. Let me pull this back here. Okay, then we might even make this run up in here, but we're running into a little bit of a pause, and obviously that big resistance was a lot to overcome. I mean, look at that. That's huge resistance right in here. Actually, if you look at all, it goes all the way back here. Look at that. So makes sense that we were talking is I think it'll eventually go higher, but that we're taking a pause here. Well, that's reasonable. So, and that happened to confluence here with the 127% extension here. So we're saying that we're looking for potentially a move down here, overall support where they find some buyers to come in here at 19,446 as support, and resistance is 19,53.7. High so far today has been 1952.113. Let's go and convert this to our 2-hour chart. You can see here we'll find some support at 23%. But I think we'll eventually pull back a little bit lower here, and we're looking at 19, just below 1945.7. Maybe they clean out the stops a little bit. We could even drag it a little bit lower if we see that dollar weakness. So potentially we can drop down to 19,42867 right there. Let's go on and going to call it right there, 194278. If they clean them out a little bit here. So we're looking for that 194278. And is there something else, some type of confluence we can get in there? This would clean them out a little bit, but you'd see some good demand coming in. Let's go to 194278. The resistance we mentioned in 1953, and that's what coming up, 1953.5. But I think it may have a little bit of a tough time, but there'll be a bit of a stretch there, 1953.5. Still remains quite bullish. Let's go and move into crude. Well, this 57.18 has really held the market, and we did get a little bit of a hammer bottom on Friday. It almost feels like, I mean, if you're short, you'd be a little bit concerned here with this hammer and that the technicals could pop up against you. Maybe we do pop up and clean some stops out here. But this 57.18 has been a bit of a stalwart of resistance, so. We've had this 56.48 for almost the entire week, and it's held really well. My concern is they're going to try and clean out some stops here, but we've already had a pretty good run up here. We're going to go right here, thinking they may just do just that. Maybe one more last hurrah. Let's go right there, 57.06. 57.06. Open the door that they may be able to, if they push them high, you're going to have some stops give way here. So let's go at 57.06. Support, well, I think they'd be welcome to, if any dips, concerned about, unless the market turns around and really starts heading south, I think that you'd see some buying come in and step in here, 55.62. 55.62. Also, if the dollar does weaken, that'll provide a little bit of a upside bid for crude oil. With U.S. yields continuing to weaken on the backdrop of falling equities, dollar yen has lost its bid. The initial downside target is 1034. Support comes in at 1068 with resistance at 1144. So we have seen the dollar yen come back a little bit, obviously with improved equity moves. Here's that 1034. Take a look at it on the 2-hour to get a little bit better, closer look. So this is our resistance, our support on coming into Friday, actually from Thursday, and it ended up hitting that, or from Thursday night analysis coming in there, and we got popping. We're still trying to press a little bit higher here. You see, this is where they'd want to go up in here and try and test if they can get up there. They already made a pretty decent move, getting up to here just above 30. It's going to be 1144 if they can push a little bit higher. $11.46 would be the 50%. Look at that. So we'll go with 11.44. Have a tough time getting there, but we might if we make a run up there. So 11.44. Support intraday. We're going to call it right there, 1085. Yeah, right there, 1085. We do have a downside target for 1034, but it's 1080, and that's on the daily. 1084 for the short-term intraday resistance support. And let's go move into the Aussie Yen. This came right down to our support when I did that analysis. That was from Thursday, and then it came. Thursday night going into NFP, and then we came right down there before that, if I remember correctly. But let's go on and move into the Aussie Yen. The Aussie Yen bounced from the daily support level of 77.74, forming a daily hammer. The initial resistance is 78.55, confluence with 78.53, which is at 38% of the 77.36 to 79.82, with secondary resistance at 78.87. A break of the lows will target 77.20. So let's move into that daily. And look at that hammer. So here what we're looking at here is 78.55. We came pretty close here to the 78 to the 38%. We'll move this into the 2-hour. $78.55 with 78.53 to 38%. That's what we'll go with, 78.55. So really it's this whole area. You could, even with a little bit of short covering here, you might even get buffeted around. Let's go right there with 78.59 right in here. 78.59. We'll call it right there. Depending on how equities respond, we got this 38%, but we've done some work in here. Let's go in and do a 127. Well, the 127 comes in at that 38% with the 161 at 178.69. We're going to go right there, 78.61 for today's intraday resistance. They want to push them a little bit higher. Support, short-term basis. We'll call it right there, 78.11. The dollar index was unable to close above weekly resistance at 97.42. The upside level of 97.89, confluencing with 97.89, which is a 61%. I didn't put that here, but you'll see it on the chart. Remains attainable. Support is at the pivot, 97.09, with secondary level at 96.65. So let's go and move into that cash dollar index, and let's take a look at it on a weekly. This is a huge level here. You see that coming across? Big level right there. You can see it going all the way back here. You see that? So that happens to be also the 97 is the 61% of this entire move of 88.29 to 103.83. Let's see right in here. We're going to move this into the daily. Now, let's go back to this weekly because we need to take a look at something here. You see, we really need to close above here, 97.42. You see that? And we weren't able to pull it off. We came close. It opens the door for them to ease back a bit. Going back, looking here at the daily. And let's take a look here on the 2-hour. I think the dollar may need to take it again because it's always, it makes one day it's like the dollar's going to move higher, and then the next day the dollar's going to move lower, and then the next day the dollar's going to move higher. I think it'll be under a little bit of stress to get beyond here, which is 97 right there. You can actually look, it's called 97.51 right here, actually 52. Excuse me. So it's going to be 97.52 on the upside for today. And right there, we'll call it 97.05. What's the dip down? We can actually push it a little bit lower. Might spook the market a little bit. Let's call it 97.03. 97.03 should find some good value buying right there, but 97.03. Doesn't mean the dollar's going to fall apart or anything like that, but you have to know where your levels are, where there's demand. Demand in the sense of the touches coming in as far as volume coming in. That would be that 97.03. Gold found short cover on equity weakness. Further upside is possible to 1314, which confluences with 1314 being the 50% of the 1281 to 1346. Support is 1293, followed by 1285, and we'll move right on into the gold. So we're still holding up fairly well. You can dip back. Support comes in here, 1293. That's going to be our support here. I think that gold eventually, I think, will have to come back to eventually. I think we make it down here, which we didn't, to the 38%, which is 1275. But if we were to see some equity weakness, it doesn't appear that, at least right now, they're in any kind of a world of hurt or anything like that. But I think we can make a run up here to this 1314. You can see that's a good level coming in right across also. And that happens to be the 50% of this range back. And of course the 1293. Well, that's what I think we can go to, but for today, it's going to be right here at 1304. Now let's go move into the bund. Well, this weak German data really has everything pushing right back up again. And we saw that Handelsblatt has even wound down the outlook down to 0.8%. Remember, I think it was down from 1.8 down to 1. Now it ratcheted down to 0.8. And France has downgraded their outlook. So it's really opening the door higher. When we look on here, we're at a very key juncture. We're looking on a weekly chart. This whole area right in here, you see that? Huge. It's going to be 67.23, even though we're just below here. But this is a huge area right in here, this little zone. We may hang around here. I think we might have a tough time getting beyond that. And so let's once again 67.23. We had 67.24, so we'll just move that down just to one look. Support, I don't think you're going to go too far lower. I just don't see where you make the case for them to slide back, at least for now. But we know how volatile this can be. We've had a huge run up already. So yeah, the support would come in at 66.61. Look at the daily on the DAX. Posting some good resistance right there. Let's go with 11,544. So right now it's going to be 11,424 for the support here on the DAX. Euro trying to push up a little bit higher. We did get up to 1258.5. We know that 1260 is pretty key on the daily close. And that completes the bias chart. And good luck, and I'll get that posted in the room. Thanks for joining us here on the European Crossover webinar.